Welcome to another segment of Building Your Wealth in Under 5 Minutes. Today we're going to be talking about how much money you need to be spending on either rent or your mortgage. It's one of the biggest questions that we get asked all the time. How much money should I be spending on a house on a monthly basis? Now, before we go ahead and get started, don't forget to subscribe, share, comment, do whatever you need to do. Just share this content with your friends and family. Again, we're putting this out so that you could get more knowledge in the area of finance. Let's go ahead and get started. Yes, guys, this is more than likely your fault. You see, what happens is that there's so many people out there that are constantly trying to build wealth, save, invest, and they're trying to become wealthier. But one of the biggest problems that people have is that they have a home that they can't afford.
No, wait. It's not that I can't afford it.
So let's go ahead and jump into how much money you need to be spending on a monthly basis on your home. All right, the first thing that you need to do is you have to figure out what is your total yearly net household income. So what do I mean by that? Let's say that you and your spouse right now are bringing home $150,000 a year in income. Maybe one of you make $80,000, the other makes $70,000. Maybe one of you makes $100,000, the other makes $50,000. But figure out what is your gross income first. Then we all know that's not what you really bring home, right? That's really what you report on your tax return. But then we know we have to pay taxes and insurance, and we pay all these different things. And maybe at the end of the year, you might be bringing home $120,000 per year. Because you're sending $30,000 between Social Security, Medicare, taxes, all that withholding. So the number one rule that you have to figure out is you grab this number and you multiply it by 3. So what does that mean? That means the price of your home should never be more than 3 times your bring home income. So if your bring home income is $120,000 a year, you multiply that by 3, that gives you $360,000. So the reason a lot of people and a lot of banks are constantly telling you, hey, you can qualify for up to a $500,000 house.
We will be $100 billion richer.
Obviously, it's in the bank's best interest that they actually sell you a bigger mortgage. So just don't end up buying more home than what you can really afford. So the rule you want to follow is never more than 3x income. Now there's another rule. The other rule that you have to remember is how much money should you be spending on a monthly basis. So what you want to do is you want to grab the price of the home that you are buying. So let's say you're buying a $360,000 home. Let's say that you put a 20% down payment. We can get into the whole thing of putting, a 3.5% down and all these different things. But let's just say you did the traditional route. You put a 20% down on a $360,000 property. 20% of $360,000 is $72,000. So what does that mean? $360,000, you put a $72,000 down payment, you subtract that number, and that gives you $288,000, and that will be the loan that you're going to get for the purchase of that property. Now that means that you have a monthly payment on these $288,000. Every month you got to make that payment. So that means you're going to have to pay what's called principal, you're going to have to pay something called interest, you're going to have to pay taxes on this property, and you're going to have to pay insurance. So when you add up principal, interest, which this is another word of just saying the mortgage, you add these two up, principal and interest, you add up the taxes, you add up the insurance, the total amount, once you're done between principal, interest, taxes, and insurance, should never be more than 30% of your bring home income. So if you're bringing home $120,000, grab 30% of this number, and that equals about $36,000 per year is how much money you should be spending on these 4 things down at the bottom. So if you divide 36,000, you divide that by 12, that gives you $3,000 a month. So you should not be spending more than $3,000 a month if you are making $120,000 on your mortgage. And this is the reason why people cannot build their wealth, because they end up buying more home. and then they don't have enough money to be able to save and invest for their future.